Welcome to this explainer. I'm so thrilled you're tuning in today because honestly, we're going to look at something absolutely fascinating. We're pulling back the curtain and unmasking the actual mechanical machinery that truly moves money on Wall Street right now. We're going to look at a massive structural shift in modern finance, and by the end of this, the way you look at the daily financial news is going to be completely transformed.
So I want you to imagine for a second, you're spending hours, right, just poring over a company's latest earnings report. You're analyzing their cash flow, checking out those profit margins, and you're feeling pretty good about having a real investment edge. But what if I told you the forces actually driving the stock market today literally don't care at all about those numbers? Does all that fundamental analysis still give you an edge?
Okay, let's dive into this. The short answer? No, it really doesn't. The traditional stock market we all grew up hearing about, the one built on finding undervalued companies and holding them for the long term, it's effectively dead. It's been completely hijacked, replaced by this giant automated feedback loop. And if you don't understand how this loop works, you're basically playing a super high-stakes game without even knowing the actual rules.
Let's just look at the stark contrast between the past and the present for a minute. Like 20 years ago, the old market was run by human portfolio managers, actual people reading those earnings reports, making discretionary, thoughtful decisions about what companies were genuinely worth. But the new market? Oh man, that is an entirely different beast. We're now in an era totally dominated by robotic algorithms and passive funds. These systems are completely indifferent to company fundamentals. They just produce mechanical reactions, dictating exactly where the money goes.
Section 1. The Rise of Blind Money.
So that brings us to the first massive pillar of this new financial era. What exactly is blind money? Well, it's basically capital that runs purely on autopilot. It's money flowing into the market, making automatic cash allocations by default. It completely skips the whole step of pricing in the true value of a company. I mean, these algorithms don't read the morning news. They absolutely do not care if a massive company like Apple had a genuinely good or bad quarter. They just execute their programming, period.
And this brilliantly illustrates exactly how much of the market operates on this autopilot mentality. Look at the data here. A staggering 63% of all U.S. stock funds are now held by passive indexers. So the vast majority of the market is no longer actively deciding where capital should go based on merit. It's just blindly following a preset automated script.
To put that percentage into perspective, we're talking about more than $13 trillion. $13 trillion of blind money just moving through the system. I mean, the sheer scale of this is kind of hard to wrap your head around, right? But it is the baseline reality of modern finance today.
Now, because most of these massive passive funds are market cap weighted, they follow a really simple but honestly kind of dangerous logic. They blindly buy more of a company simply because it's already big. It creates this wild, self-fulfilling prophecy. The bigger a company gets, the more default cash allocations it receives from this $13 trillion pool, which pushes its price up even further, and then that forces the passive funds to buy even more. It's a loop, and it has absolutely nothing to do with whether the company is actually worth that price tag.
And here is the direct result of that automated loop. The Magnificent Seven tech stocks have completely ballooned to make up over 33%, literally more than a third, of the entire S&P 500. A massive chunk of the market just isn't being priced on actual value anymore. It's simply absorbing these automatic cash allocations by default. It's basically inflation by algorithm.
Section 2. The Hedge Fund Machines.
Now you might be wondering, what about the active investors? Surely there are still human experts out there making discretionary moves, right? Well, the active investment industry is basically consolidated into a handful of massive multi-strategy titans. We're talking about giants like Millennium, Citadel, and Point72. But listen, these aren't the old-school stock pickers you might be picturing. These guys operate at an incredibly high risk level, typically running a 4 to 8 times leverage. That means they are playing with mountains of borrowed money. And because of that extreme leverage, they are governed by incredibly strict automated drawdown rules.
So when their portfolios hit a specific loss limit, things happen instantly. They don't sit around in some fancy mahogany conference room and debate whether the Fed is going to cut rates next month. They don't have these long, drawn-out discussions about whether a geopolitical conflict is really over or just taking a pause. No way. They just sell. It's an immediate, zero-emotion, mechanical reaction to protect their borrowed capital.
Section 3. The Automated Options Trap.
Now, what's really interesting about this slide is it shows the engine underneath all of this. Underneath the blind passive money and the highly leveraged hedge funds, this is the thing that pours gasoline on the fire. The sheer dominance of zero-day options is just staggering. Same-day expiration options now make up around 63% of all S&P trading on peak days. Just think about that for a second. Nearly 2/3 of the trading volume isn't people buying stocks to hold for a year or a month or even a week. It's people betting on what's going to happen by the time the closing bell rings today.
And the financial weight of this is honestly mind-blowing. We're seeing over $2 trillion of notional value, which means the total underlying value of the assets these options control changing hands in a single trading session. This explosive options market is the foundation for those wild, irrational swings we see so often. Let's move to and see how this builds into a total chain reaction, right? Step 1. A massive wave of same-day options explodes into the market. Step 2. Every single one of those options forces a dealer on the other side to hedge their bets in real time. They have to frantically buy or sell the underlying stock just to keep their books balanced. Step 3. Systematic trend algorithms like commodity trading advisors who just blindly buy when the trend is up and short when it's down. They detect this momentum and pile on. And finally, step 4, the market swings completely irrationally. These automated reactions just stack on top of each other, creating these massive market waves built purely on mechanics and totally detached from actual company fundamentals.
Section 4. Ignoring the media noise.
So the crucial point is this. If the market is being driven by $13 trillion in blind passive money, leveraged hedge fund drawdowns, and a massive automated options trap, why do we constantly hear entirely different explanations on the nightly news? Well, when you see the market take a sudden, violent swing, the mainstream financial media will always try to hand you a neat little story, right? They'll blame the economy, or a political speech, or some event overseas. But the reality is that the dominant players making those huge market moves aren't analyzing valuations or news events. They're literally just reacting mechanically to mathematical triggers.
I absolutely love this quote from the source material because it perfectly hits the nail on the head regarding this illusion we're presented with every single day. The headlines you read are often just convenient narratives invented to help rationalize the math of a giant mechanical feedback loop. It's just human nature to want a simple story to explain chaos, you know? But we have to see past these dumbed-down narratives. The stories we're told are really just comfortable rationalizations for pure math.
Which leaves us with a critical choice. You now know the actual rules of the game. You know about the 63% blind money, the leveraged automated selling, and the $2 trillion daily options trap. So I have to ask you, the next time the market violently swings, are you going to believe the media's neat little story, or will you believe the math? Stay curious, look past the noise, and always remember to watch the actual machinery moving your money. Thanks for joining me on this explainer.